All right, welcome everyone. This is a Viper Professional Training and Sport webinar. Today's date is Monday, January 6, 2020, and the title of tonight's webinar is Trade Boxes and Trend Lines. And as everyone knows that's been to our webinars or our live trading room, everything that we say and do at Viper Trading Systems is for educational purposes only. Futures trading, forex trading, any kind of financial instruments trading involves risk. Therefore, there's always risk of loss. You should only trade discretionary capital, and that is money that you can afford to lose. Nothing said in this webinar. Other webinars we have, our live trading room or anything else with Viper Trading Systems, should ever be construed as trading or investment advice. And as always, everyone does trade at their own sole discretion. Any questions on the disclaimer? All right, if not, we're going to go ahead and get started. Bear with me a second. You should be able to see the regular screen here coming up. First off, before we talk about trading boxes and trend lines, obviously you need to know, are you going to go long specifically? Are you going to go short specifically? Or are you going to box it in for either direction? Okay. And the way to determine that is to know the trend, obviously, right? And as I think anybody that's been trading any amount of time at all can clearly see that this is pretty much, at least on this part of the chart right now anyway, is an uptrend, right? It's absolutely an uptrend. So, wouldn't a person be wanting to draw on their chart and get ready for a trade? To give an example, like use your lines like we teach. Draw your line on your chart. There's support, and there is support right there. Okay? Now, when you draw those on your chart, you're pretty much ready to trade this, just the way we did this morning with oil and we did with gold, called trade on ES and everything. So what we're going to talk about tonight is quite a bit of how to box in and also trend lines. But I want everybody to know, first off, just like I was saying there, that you really want to be specific on which direction you want to take these trades. At the open of the market, it's a little bit different. Like oil, to give an example, when we open that room in the morning, if it's really trending up, we'll only go long. If it's kind of, so-so, we'll box it either direction a lot of times. But most of the time, we're trend specific. It's important to be trend specific on your chart, because if you're not, you're going to get those quick bursts and they'll be going against you because you're on the wrong side of the trade to begin with. Okay. Anybody have a question on that so far? I know that's quite basic as far as that goes, but without seeing prices on this chart or anything, I can flat tell you for a fact there's going to be either a trade right in here or somewhere in here, unless they decide to break down. And if they broke down, I'd be looking for a trade to break below that line there, come back and kiss it, something like that, and then roll over, wouldn't you? I mean, that's the way to trade this, because we know for a fact that right now, with what we see anyway on this chart right this very second anyway, is that it is still an uptrend. But if it was to change, we could go the other direction too, right? Let's see. This morning you had to go with the trend even early. Louis, I think you did. Yeah. As a matter of fact, let's just leave these boxes on here and let's just see, for the fun of it, if there's actually a trade in these boxes. I'll just go to the regular template and we'll see. We'll just load the regular template and we'll go from there. I'm not responding. Don't you dare lock up on me. Give it just a minute. There we go. All right, so what do you see? Anybody? So we drew on our charts right where those dots were, and we know, for instance, if this is going to break down, I'm going to be looking for a short here, more than likely after a little pop and then a retrace and then a roll, or I'm going to look for a bounce here. Now, when somebody says, and I get emails, quite often from, people that have never heard of us or things like that, and they'll come in and they'll check us out and they'll go, well, why isn't there like an exact, place that you want to take that trade? There's not an exact place that you want to take that trade. What if this was to break down, come back and kiss and roll? I'd be going short. If it breaks this and goes long, I'll be going long. Okay. Now, would I actually box it in with either direction right now? No, because it's still an uptrend. Okay. Because they could easily fake you down to here and then pop it in your face and go, because this is actually an uptrend. You can clearly see, on the chart, if you look here, you've got a thrust up here. You've got a retrace that made a lightning 3. And I'm going to just draw these manually so everybody will get used to seeing it more. And then you had a nice thrust up, and we'll just go all the way up here. Okay. Now in anybody's book, that's a low, a high, a higher low, and a higher high. So that is your identified swing on what we call lightning 3. So until it breaks lightning 3, we're not looking for a short trade, right? Okay. But we are looking for a trade like this to box it in, aren't we? So the whole idea of boxes is, like, let's say, for instance, if this was to bounce at 13, what if it bounces at 13.50 or 13 and a quarter or even 13? So you don't really know exactly, where to call that trade, simply because we don't know if it's going to break down or if it's going to break up. But by the trend on the left, we do know that it's not taking this out yet. So if I was to walk into my trading room, and by the way, we did call this trade this morning in the room, so I'm going over exactly why we saw it that way, so that everybody can take advantage of these trades like this, okay? Because this was literally a huge type trade that we took in that room this morning, okay? So don't get in the habit of just going either direction, okay? Because that's going to take more of your money. Now, if you were to go, let's say, for instance, if this was to break below here and you put a really tight stop or even flipped it, you could do something like that. But I can guarantee you, usually when they break, they'll break quick and then they'll pop back quick. So you could see your P&L be down $300 with just 2 contracts in no time at all. Okay, so the best thing to do is just exactly the way we teach. And it's not rocket science to actually use these boxes like this. For instance, right now we have a candle down, a candle up, and a candle down. So there's your box right there. Now, if you wanted to be a little bit more cautious so that they don't just barely break you up, you could do it like that and have to take out that candle to head up. But then you still have to put your stop underneath here. Okay? So the importance of boxing on your chart is so that you can take advantage of trades as they go back the direction that you want them to go. Okay. But you've got to first diagnose your chart every single time. Okay. For instance, let me show you another one here real quick. Bear with me a second. I'll bring over crude oil. And let's look at this one right here. All right. Now, what is this? This actually happened this morning also, remember? Is this actually a trend change yet? It's not, but remember, we did get a nice little pop trade on the long side, but also called a trade that somebody could easily take when it kissed that 91 area right there. Remember that in the room? High, low, lower high, lower low, identified swing. Okay, that's your identified lightning 3 swing. So when it didn't take that out, could you actually be ready to take a trade like this? Even, for instance, like that's a little flatter trend line than I like. I like it more like this myself. But you got to be careful drawing trend lines too, obviously, because that's all you see right now, right? Okay, so we've got a tool and object trader that you can actually use the trend line called the wedge. Or you could even do this big one if you wanted to. If you want to wait till it absolutely breaks down, you could always draw this trend line here too. Okay, so when you see this type of thing, it hits its head at resistance. I don't care if it even turns the background green, because it doesn't take a lot to turn our background green as much as it takes to change the midband. Okay, and that midband's pretty critical. Now, when it's sideways like this, And remember this morning when we actually took this trade long even, it was because it had this higher low here. And at the time, this is what we saw, something like this right in through here, right? And some of our people even took it literally right there when it bounced off support and got about 10 ticks. But look how that broke that trend line. See there? It broke that trend line. Okay? So you can utilize the tools in Object Trader to take these trades like this. Now, trend line, keep in mind that what I normally like to do personally on a trend line is when it breaks the trend line, I like to watch and see what the next bar or so does, and then I box it. And, now could you have taken, if this would have been a green like here, what it was, could you have taken that long out of that box? Yes. Okay. Preferably at mid bands or when they're stair stepping up, and this wasn't stair stepping up yet. It was still a downtrend. So you could box this. What I like to personally do on these trend line breaks is you got to kind of look and see where support is. And even if it breaks that trend line, you pretty much got to draw your box accordingly to where it breaks, see, the support area, which is just like boxing it basically, but you're seeing a trend line also. Let's see, David L., long time coming, hoping Object Trader is running in Ninja 8 now. Not yet. Object Trader itself, now we do have the scripts in Ninja 8. You can do everything that I'm showing here on this chart in Ninja 8. We just don't have this little tool called Object Trader. And I was promised it on the first, but didn't get it on the first, didn't get it on the first before. I'm just waiting, just like you are. And I'm hoping. Okay? But the beauty of trading our system is, if you were in a room, to give an example, where would the exact entry be on this trade? What if you said, you know what, I'm going to short 91. Okay, so let's say that you were in a room and they said, I'm going to short 91. Well, what if it goes through 91 to like 95, if I remember right, or 94? You get scared and you think it's going up, don't you? Exactly. So isn't it best to box in and trend lines? And that's exactly why we designed this tool here called Region and this tool here called Wedge. And I don't really use a lot of these others except this one right here. I use bar close a lot. So I use Region, bar close, and normally Wedge. And occasionally I'll do a sniper, but sniper's the same thing as Region. It's just that if you were using sniper, it's a horizontal line. And with Region, you can just use one part of the box or the other, or both. See, because you can actually do a sniper also, for instance, where it was to hit its head here and short, or if it even went through the bottom when you could short it by just simply turning those on like that. But once it fires one, you'd have to turn it on again to get it again. Okay? Anybody have any questions so far? Because this is absolutely the way we trade each and every day. And this does work. Now, one thing I would highly recommend, if you're going to trade phantoms at all, okay, trade phantoms when they're in this color background for a short and this color background for a long, and only when they start going back the direction you want them to. For instance, if this was going to actually be a true phantom, to the long side, let's say that it came down, see where that little swing is right there? Could you draw a trend line? And if it got you in, and see, it never got you in long at all. Okay, so that's the way you can do a phantom. Now this was breaking down. Remember in the room this morning, I even mentioned that you could box this in right here, because at the open, we had already hit our head at 91, and they broke through 79 and took us out of our long. Okay, the long that bounced off of, remember where I had the line drawn? We got a little 10-tick trade. Okay, but this was a nice little short. But remember, I didn't even take this little trade until here, because I trusted this a little bit more right here to break the box. And it broke and it kept on going, so we were good. Okay? Now, real quick, if anybody has any questions, be sure to hit me up with them, because I want to show some, good trades that were taken, and they're called ahead of time in that room. This is not, just after the fact type of, hey, this would have been great if you would have taken it type stuff, because they were called. Okay, for instance, this little trade on ES right here that was called in the room ended up way up here. Everybody remember that? Now, if you go into your computer in the morning, though, and you see this exact chart again, how would you be trading it? Because looking on the left of the chart, it's definitely an uptrend. Now, on that other one we were looking at, it was definitely a downtrend, wasn't it? Now, does that mean that you can't take some of these trades, against the trend? And you can do that with trend lines and boxes. Okay? But keep in mind, when you take counter trend trades, that's usually when you're going to end up getting, burnt, is what I would say. And you've always got to be on the right side of the trend, or it's easy to get burnt. Because, for instance, like right here, even, let's say that you were trading at 12 o'clock at night, and you saw them come down and do this nice little bounce, and you draw a line on your chart. You say, okay, this binged around for a while, but it finally made this dot. When this made this lower high up here, could you actually start boxing this in and say, you know what? If they break my identified swing, which is here right now, or here for sure right here, could you actually short that? And see, you can. Okay? But what was your safer trade? The safest trade, notice how it just pinged around over here, wasn't it, when it actually took out Lightning 3? See where that actually took it out with a vengeance and headed down? So you're going to find this Lightning 3 works quite well. There's your thrust up right there. There's your retrace right here. And then this thrust up did not take out the top. And when you see that, what does it take to actually change this to a high, a low, a lower high, and a lower low when it takes out that support right there? Just like that. Okay. Now, granted, could you also, use Lightning 1 and you say, okay, this is heading up. It's heading up a little nicely. It's heading up nicely. It's starting to try to roll a little bit. It's heading up again. When does this actually break Lightning 1 or 2? Well, you have a high, low, higher high. When it breaks this with like the close of a bar right through here, you're pretty much no longer heading up on what we call identified lightning. And that's on your Lightning 1. Or possibly even 2. I'll draw it and see which one it was. I think it's Lightning 1. Yeah. So you had a high, a low, a lower high, and a lower low. Okay. So that's actually when it took out Lightning 1 right there where that line's at. Let's draw Lightning 2 and see what it did. Lightning 2, you would have had to wait till it took out this area right here. So that would have been a lot, what I'd call a less quality entry on it. If you want to scalp, that is. You remember what Charles was talking about? I didn't watch his webinar just yet, but I've seen his webinar on 10 Ticks to Tahiti a few times, and I know how he teaches it and everything. And you can definitely, if you use like Lightning 1 to give an example, and you want to go ahead and take a trade, for instance, when this comes up here and just flat does not take out that top and it starts getting a little tipsy and you get a lower high and it takes that out, you're more than likely heading down at least to mid-band or even to here. And in this case, it actually broke even more. Okay, so you can use Lightning like that. Now, personally, I'm a little bit more cautious, and I would not take this trade short until I saw this high, this low. This actually made a lower high, but this was a lot of noise in between. But when it broke this support, it headed down in a big way. So you can definitely take it then too. Okay. Let's see, when you say boxing in, are we expecting to do a long or short out of the box? Well, that's what I was just explaining, Adam. Did you show up a little bit later? Because let me just go over it real quick. Let me go into ES again, just like we've got it. Okay, let's go over it again. If you look at this chart right here, and let's get rid of everything on the chart just so you'll see it. All right, first off, you got to diagnose your chart. You walk into your trading room and it's 8:29 in the morning. What would you say to do with this particular chart right here? Well, I would draw a line where support is. So you've got a low, high, higher low, higher high. That's a given. See, that's already happened. Okay, so you draw your lines on your chart, and you draw your line on your chart. And now I look at it this way, okay? Now this is where I'm actually at right now when I get up. Let's just pretend I got up at 8:25 in the morning and I just got my computer on, okay? Because this is important to diagnose your charts correctly. All right, if this takes this out and comes back and kisses it, or even if it breaks it, you can short it, yes. It's just like that trade on CL just a few minutes ago. Could you short this if it breaks this area right here and starts heading down? And the answer is yes. Now, I personally like it to at least break it, fake you, come back, and then roll through it. But they don't always do that because, as you clearly saw on oil, you know, they broke down in a big way. Let's see, where was that at? Yeah, right here. See where they broke support even here, and they just headed down in a big way. And if you look back, even back a ways, let's see if I can find another one. Yeah, like, let's see, like right here, to give an example, if you were watching this and you had a high, you had a low, you had a lower high, if it takes that out right there, that's pretty much a short, okay? And it ends up being a short, but it's pretty sideways too sometimes, but you still got to put your stop in, okay? Let's go back to that ES. So what I would personally do on a trade like this, I would not box that in both directions. The reason for that is because it needs to break this to go short. And if they break that and they stay broke below that line, I would probably just hit the market order. But I don't like where they just barely take out support. You got a green background, a green midband, and then they pop in your face. This is an absolute by the book long trend. Anytime you can look to the left to trade the right and see that right here you've absolutely got this on this side of the chart, and then on this side of the chart you have this. You do have that lower high, right? It's what we were talking about a minute ago. But that's your left-hand side of the chart. That's your right-hand side. This side right here, when you've only got from here to here, I don't personally short that like that. Okay? Now, I would short it if it broke that line, but usually only if it breaks it with a good, you know, several ticks below the line itself, and hopefully that it kind of kisses it in a little consolidation patch and then rolls over, you know, some kind of a, because granted, this could have been a phantom too, still, right? It could come down in here and bounce still. But when I see it take out the left-hand side of the chart like this, then I'm pretty sure it's going to be going short. You know, keep in mind that phantoms, you know, if you have a high, a low, and a much higher high way past the previous swing, and they take that support out, they're going short. They're not going to a phantom. Okay? But until they take this out, they're not going short. Okay? So this is the way I would personally box this in right here. Just like that. And then once you get into it, you'd have to put your stop at the swing. You know, this little trade this morning, by the way. Now, keep in mind, you don't have to take this trade that's all the way down here. You can wait for this to start really stair-stepping up, and you know for a fact that it's going up. Look, we're not going to, you know, just do some object trader trades. I just want to show you kind of what to look for. We'll just go ahead and go a little faster. Okay, remember this little trade here? Okay, this was called in the room this morning with the box. Okay, this was at 8:30-ish. That's what Charles and I talked about, boxing it in, remember? Okay, but I also mentioned that if you got it right at the open, you got a better entry right down here. Okay. Now see, when it hits this, you want to take some coin because they're always going to pull back a little bit. Okay. See how it, that stupid thing was paused, wasn't it? Did y'all see that, or was it paused? It was paused. Okay, let's back it up just real quick then. I want to show this so you can actually see the progression of the trade itself. Let's just let it back up just a second. Say that again about Phantom, Louis. Well, what I was saying on Phantom, you got to really get to where you really diagnose a Phantom well. You know, for instance, if this was to come into this area, this little sweet spot, and bear with me a second, it's still loading, and barely take out that support, I would probably look for a Phantom. Okay? But when they take out this left-hand swing where my hourglass is spinning right now, you got to be careful, because if they took that out, they're more than likely heading south. Okay, let's see. Let's let this lock in. All right. Now, let's diagnose it from here. Let's say that you got up at 7. Let me see what time I let that stop at. Let's say you got up at 8:22 in the morning and you're watching this chart right now. Okay. Now, let me slow this down just a little bit to a 1. All right. Now notice that it's got a high, it's got a low, it's got a lower high and a lower low, but it did not take this out yet. See, this is your identified lightning 3 swing over here on the left. Okay. So if it doesn't take that out, is this a downtrend? Well, it is on this side of the screen by having a high, low, lower high, and a lower low, but it hasn't taken out the left side. The left side is the most important part of your screen to watch, because until they take this out, they're not heading down. Okay. Now, if they do this where you get a high, low, lower high, and let's say that your previous swing was way down here instead, like something like this, just pretend with me for a minute, then would this be a legitimate short? And the answer would be yes. Let's just pretend there are bars down in here. Would this be a good short right here? And the answer is yes, because it's taken out the support. But when your support is so close by like this right here, unless you're really good at getting it, you're not going to get 5 or 6 ticks on that trade. Okay? It's always relevant on where the prices have actually been. You know, if there was like a swing down here instead, and you break here, like so, then yes, I would probably short that, thinking I could probably get down close to here. And that's a decent trade to look for. Okay. And then you could always watch it and say, okay, if it bounces off a Phantom, I could probably take a Phantom trade, because then still on the left side of the screen, and pretend again, this has got bars in here. Let's just pretend that. Then you would have a low, a high, a higher low, and a higher high, right, on the left side of the screen. So if you then got bars down in this Phantom, could this be a legitimate long? Yes, from a Phantom. But it didn't do that. See, our prices are actually right here instead, right there, and right there. So when you've got a line that you draw like this, and you say, okay, let's just say this is all we see right now. We're up at 6 o'clock in the morning. Well, we know we have a high, a low, and a higher high. Until they take that out, they're not heading down. Okay, and the rest of it's just noise, and that's why sometimes you're going to get kicked around if you don't see the true trend that's on the chart. Because when this changed green and this changed green and everything, this was telling you that it was heading up. Okay, now they like to do A, B, C's, and they look to the left to trade the right. That's the way their algorithms are always working. Okay, now if you saw that hit exactly right there at that line, could you actually just hit a market order and then maybe turn on even bar close, you know, and do another one or even a couple of them? Sure. Okay, because it bounced off support, and then I would put my stop nice and tight with like exit on close. Okay, now remember, this is not an after the fact, because we actually called this trade in the room this morning. as this was coming down to Phantom, I called it, and then we also talked about boxing it in at midband too. Okay, and some of the people took that. And just keep in mind how quickly something like ES with a few contracts can get you some monster money. You could just simply watch it for a moment, watch for $500, 600 or whatever you're trying to go for. Bring your stop up a little bit, just like right underneath that swing because they shouldn't test it anymore. And you don't have to trade for this thing. We called this thing way earlier this morning where it was going, but you can also just say, you know what? I like $500. I'm happy with that. That's 4.25 actually after it actually closed. But could you actually do that? And you say, well, wait a minute. It looks like it's breaking this box at midband. Maybe I do want to go ahead and take another shot at this. And then put your stop just underneath the swing. Like so. Okay? And that is actually the way to trade our boxes and also to diagnose a chart. I can't emphasize this enough because all charts look different, but they're always going to have the swings on them. Why would we take a long at midband on ES, Adam? Well, you could take, this was actually called in the room live. We had this boxed in just like this because see, at 8:30, this is right here. This is when the market officially opened, was right there. Okay. And sure, the Phantom happened before the market opened, but this was a legitimate trade right here. On that long prior, that's where 10 ticks, not a runner, came to be the way to go. Well, basically, what you can do in a case like that is, for instance, if you get in way down here, you got a lot better entry than at the midband, right? Okay. But when you diagnose your chart properly, you know for a fact that it was still an uptrend. It bounced. You got a little thrust and a retrace, box it in, it bounced again. Can you get hurt on a trade like that? Probably not. Peel some off and let a runner run. Yeah, Charles actually, that amazed me today. He must have been in a hot mood for ES because he actually went 8 contracts, he said, out of this right here and took 4 off. I don't know exactly where he took them off. We could probably figure it out. Let's just let this thing go for a second and see. I'll go on 500 times. Now, if I had like 8 contracts on, I would probably take off 4 of them for sure right in there. See how it came back? But we didn't have 8, we had 2. So, you can let it ride. The one thing that I want to say about larger amounts of contracts, though, I'm trying to think of the guy that said this, but he works at Top Step Trader, and I think his name's Michael Patak, which is the CEO of Top Step. And but I think it might have been John Hoagland even that said it. He's another high up guy at Top Step. He said, if you can't be successful trading 1 contract, then why do you think you're going to be successful trading 10? And that's really the truth about it. Because now personally, I don't like 1 contract simply because let's look at this chart right here. Let's say that you went 1 contract, all right, out of this thing. You said, you know what, if it hits right here, it's probably going to pull back, so I'll just take some coin. So let's say that you got filled right here at 19, and you're going to take it out at 22.75. That's 3.75 points, right? So that's about, what, 14 ticks right in that area? So that's only up $160 or so, right, when you hit that right up here. But notice if you were in just 1 contract, that if you didn't take the coin, let's say you're up $170. Well, guess what? You went all the way back to cost. Now, how many times have you gone back below cost? Said, doggone it, I had $170 and now I'm back down to 0? See? So isn't it smarter? And Charles's whole webinar on Thursday is going to be about this. 2 contracts, scalp and runner. Scalp, take coin. You got $160. It comes back. It does not take you out. It runs. Okay. Now this right here, I recommended, whoop, let me get rid of this. I don't personally hold this on ES or any other instrument. If I can get any kind of a trend line like that, like I say, okay, it's heading up, I can draw a trend line on my chart. Let's just go ahead and redraw it. I'll do it with a ray because that way it will draw. And I see something like that and I want to pull this back a little bit or something. If that takes that out, I kind of get out of a trade like that, at least out of all but one of my contracts. Because here's an example of what can happen to you if you're in multiple contracts. All right. This hit this predictor area and then it started pulling back. Where do you decide enough's enough? It finally bounced right there. I recalled that trade in the room this morning. I said, box it in. Right? Now, wasn't that a smarter way to trade? To, even if you redrew and said, you know what, I'll just go with lightning. If it takes lightning out, you had a high, you had a low, you had a same high. Your lightning was right here at the time. So even if it took that out, you could have been out of that trade. But see, here was a high, a low, and a lower high, and it took this out right here. Remember? So high, low, lower high, lower low when that bar formed right there. And for sure, when it took out that swing right there, you were done. In my personal opinion, because 4 contracts from here to here, you do the math, that's almost $1,200 if you had 4 contracts holding them. Now, if a person wants to do that, it's your account. If you got in down here and you took 4 off already, hey, power to you. Just run it all day if you want to. But most days do not do like today did. I mean, you'll see time and time again where if you put on, X number of contracts and you just try to hold them all day, you can't do it. Because they go way too much against you. What are you going to do? Hold it. Let's say that you got filled down here, somewhere in here. Okay. Well, granted, you could still be holding it, but how much money was that with like 4 contracts to begin with? That's huge. Okay. And there's another thing too. If you do something like, well, just to give an example, let's say that you do 8 contracts on something like that. All right. Let's go back and just pretend you do 8 contracts on the break of that box right there. Actually right there on that bar, and you put your stop right here. That's what, 19 to 1675. That's over 2 points, 2.25 points. Do the math. That's a pretty huge loss. So it's all relevant to the size of somebody's account. I mean, if you got a $5 million account, then that ain't gonna hurt you. But if you've got a $10,000 account and you draw back, 10 ticks from where you got in, that's right at 10 ticks. What is that? That's $1,000 bill. Now, granted, if you're right and it doesn't take you out, that's 1,000, that's 2,000, that's 3. That's a huge move. But it just doesn't happen as often as you'd think. Let's see, do you take into consideration higher time frame pivots that play? Well, Adam, on your question, what I personally like to do, and I stress this time and time again in these webinars, is look at if you can't see this on your charts, draw you one that has the webinar. Bear with me a second, I'll get it. Let me get my control center. It's hidden behind this silly question log. Here we go. All right, let me get a webinar one again. And let's see, that's ES, so I'm going to draw an ES chart. What I'm trying to do tonight is make this just really simplistic so that everybody can see what you're really looking for on these charts. Every single day that you look at your charts, you got to decide which way you're going to go on these trades. Okay. Notice that, let's say that you just got up, and let's pretend that you didn't get this first trade that we called, but you were looking for this one. Okay. Now watch what happened right up here on Lightning 1. Now let's go ahead and draw it here too. All right. Now if you were looking at this right here without looking at the prices at all, is this your Lightning 3 swing right here? Low, high, higher low, higher high. Higher low, not a higher high, at least as we speak. See there? It's just barely right at it. Okay? So that's your identified swing right there. Now, if I was looking to short this chart, I would expect it to do this. It would have to break support. It would have to come back and kiss it. I'm always looking for both ways on the chart, just like Charles is, just like most of our members are. Because if this was to do something like this and break, then yes, I would short it. And I might even short it if it just broke it, but if it broke it and then came back above the line, I'd get out in a heartbeat. Okay? Because on the left side of the chart, this is what you're looking at. Thrust, retrace, and thrust. Because Lightning 3 is going to be really good swing pivots. Okay? So until it breaks that, you're not looking for shorts. Is this a short here, or is this actually a retrace long? You like this, Louis? Yeah, this is one thing I want everybody to see, because, you know, the thing is, if you get against the trade on the wrong side of it, the problem with markets is they can really boost them really quickly. And if you've got your stop like 15 ticks out with 3 contracts, you just gave yourself away $450. You know, and on ES, it's even more than that. You know, they don't move as fast, but, you know, they still move fairly quickly, though. There's times you got to really watch them also, just like all of them. Okay, let me see if I missed any questions at all. Yeah, there you go. Kurt said, all I traded today was 1 contract and still made $450. Yeah, and that's the thing, because you're looking for these exact type trade entries that we're teaching here. You know, like I say, we get people all the time that'll come in that, you know, kick the tires for a week or two, maybe even a month, you know, and don't realize the true value of swings and boxes, because they're huge. You know, I mean, if you were looking at this right here, well, you can clearly see that more than likely, see thrust, retrace, thrust. If they come down on top of that, that's pretty much where they should bounce, right? Chuck says, this is not too basic. This is great. Good. Okay. So when you see this and, you know, you're looking on the left side of the chart and you get these nice retracements. See, that's that retracement right there that we called in the room this morning. Now, what if this wouldn't have worked? Would you have shorted this if it barely took this out? No, because what you do is you box it. What if this went lower? You keep boxing it. You keep boxing it. You keep boxing it until it actually breaks, right? Okay, but notice that even if it came all the way down into here, that's still a higher low. See there? So even if this didn't bounce here like it did, would we have been looking for a short just because it broke this little line right here? And the answer is no. And that's where you'll get on the wrong side of trades if you don't let them retrace. What if this would have done a little stair step and done more like that, and then said, okay, I'm through. I've got everybody thinking I'm going short. Now I'm going long. And that'll happen to you. You've got to always look to the left to trade the right. Super, super, super important. And I don't just look to the left with smaller bars at all, or the small swings. I look at these Lightning 3s. Let's see, a lot of times it seems you like an ABC before taking a trade, but that's a lower low than before. How do you decide? Well, boxing can still get you out of that mentality, Tryphone, because just to give you an example, right here, when this actually happened in real time, we called that trade in the room this morning. But look what also forms on that chart, that predictor. And this is definitely a mid-band type trade. Turn on your alert even, and you'll see it too. Let me see if I got my alerts set up. So you see that flashing right there? That's letting you know that that's a mid-band trade setup right there. Okay. What I'm trying to do tonight is, stay a little more basic, but also to just hammer and hammer and hammer how important with us trading 4-range bars, or even if you use smaller Rankos even, how important it is that you have the trade on the right side of the chart. Okay. Now, if you get up in the first thing in the morning, and let's say that ES has been heading down, let's say that this is what you saw when you got up. Okay. When did this change to an uptrend? Anybody? Well, you watch it and you say, okay, well, there's a lightning 3. Starts breaking it. You're thinking maybe this is heading up, right? But not yet, because that was like a double bottom, wasn't it? So could you wait for a thrust and a retrace? Box it in. Now, granted, this little trade at 720 did not work out except for a scratch. What if you boxed this right here and you got out of the box and it went back in the box? You can get out. Could that have still been about a 10-tick trade? Close to it. Okay, because I would have boxed that trade if I was up at 714, if I was trading the ES at 714. I don't normally trade equities at 714 in the morning. I like oil and gold. But that is a legitimate mid-band trade. It just didn't work. Okay. It was even a legitimate one right there. That was 10 ticks. That was about 10 ticks. That was 10 ticks. And then this was the trade that we boxed in the room, and that was the trade we boxed in the room. Okay. But you've got to always diagnose your chart on the left side of the screen. Thrust, retrace, thrust. That's definitely the identified swing on the left. It doesn't take it out, and what does it do? Off it goes. Do every web like tonight, and I will be a millionaire in no time. Okay, all right. Well, definitely, this is absolutely the way to trade this, because let me show you another one. I'll show you gold. Bear with me a second. I'm going to pause the screen and get a gold chart up. And I'm going to ask everybody if you see the same trade that we called in the room this morning, and if you would have taken it also. Because it's, the whole thing is you got to take it also. You can't just say, well, you know what? I'm diagnosing it, but I'm not going to take that trade. Well, then you're going to miss out on a lot. But let's diagnose gold. And let's just diagnose it right where it's at even. All right. So you had a high, you had a low, you had a higher high. This is support right here on this chart at the time. What is it doing right now? It's oscillating below it. You got support here now on this side of the chart. See, this is your left side, thrust, retrace, thrust. That's your support. This is the right side of the chart, high, low, lower high, lower low. So guess what? If they take that out, they're heading down. And where did we say to actually box that one? Does anybody remember? I'll go into 500 times, just so a person can see it. This thing was really choppy this morning on gold. You had, I called this trade right here, Phantom, worked. Second Phantom worked. And then after that, you don't take any more, because I don't like to take them unless they break. I'll usually take 2 or just 1. Just depends. If you can get 1 and get 10 ticks with 2 contracts, you're up $200. But see, when it breaks that support right there, that's not heading up anymore. Okay. But now if you go by the rule of thumb that we teach, we actually drew on our chart and said, you know what, if this gets up to this 1574.60, we're going to short this. It never did. I mean, it never did. And you had to actually just hit the button to get it, or what do you do after that? Anybody? You got to wait for a retrace, unfortunately. And what do they always do they'll finally get you to that point where the retrace, there was a retrace right there. See it? And this little trade right here, we actually called, I believe. Let me look at it. Let's diagnose it though. Let's see if we can all catch it. You want to? Let's see if we can all catch it. All right, draw on your chart. Low, high, like an ABC, so that is your identified swing on the left side of the chart. Now it hasn't gotten what we call a lightning 3 yet, but I'll bet it will be a lightning 3. Okay? All right, so then you have double bottom so far, so I'll draw another line on my chart, like so. We say, you know what? If it gets up in this little sweet spot right here, we're probably looking for a trade, right? Because if this doesn't take this out, this is not identified. This is over here to the left. Okay, let's see what it did. Still bottomed. Anybody remember that little trade that was called in the room this morning? Now, what would you do when you diagnosed your chart and you said, okay, I'm going to slow this down for just a minute. Let's draw a line just like we're seeing this. We had a big old thrust. Let's just start even right here. That's a little top. There's a thrust. There's a retrace. And there's another thrust. Okay? So looking at this side of the chart, you have a high, low, lower high, lower low. That is definitely the identified swing. Okay, now on the right side of the chart, you have a double bottom. That is not an identified swing. That's your identified swing right there. Everybody see that? Right there where that line's at is your identified swing. So if they don't take that out and they roll over, could you actually short that? Are we looking for longs yet, anybody? Because all the time people are saying, well, do you want to box this either direction or what do we want to do? Well, what you want to do is you want to wait till it decides it's going up. And at the time, this is only going up if you caught it right here. And you would have scalped it. See what I mean? That's a little lightning 3 swing. It broke it. You could have taken a quick long, but that would have been against my rules because that's a high, low, lower low. That is your identified swing right there. Till it takes this out. This is the way I see this chart right now. If this was to break up, pull back, turn my background green and everything, and take off again, then I would take it long. If it rolls over right up here, I would take it short because I'm diagnosing my chart in real time like we did in the room this morning, and you would simply box this in. And the way I do it on this right here, we'd wait and see this bar's going up. That bar we don't know yet because it hadn't closed, and box it accordingly. That bar went down. So guess where your box is, anybody? Got a candle up, candle down. You want to at least get it below the wick of that candle right there. And with mid-band that close, I'd probably box it right at mid-band. And this trade was called in the room this morning. Anybody remember it? This is definitely a good way to trade if a person just learns to see on their chart and diagnose it correctly. You know, because if you look at this, what would it take for gold to head up? Anybody? What would you think it would take for gold to head up? Well, right now it would have to take out 1571.10, right? And it hadn't done that, so we're still looking for shorts, right? We've got an identified swing here and a low here, and we didn't take it out, so we shorted a top and we're heading down. Okay? But you always have to identify on your chart where it could change trends. Now, this didn't turn out to change trends to go the other way, but you still have to diagnose it. It would have changed trends if it would have broken here, come back, kissed, support, and taken off. But instead, it decided to head down, and you just simply keep dropping your runner and dropping your runner. If it breaks, you know, where's your identified swing? Thrust, Well, thrust, retrace, thrust. That's not identified as much as that one is right there. Now this one's identified right here. See it? It closed below this swing. If it closes below again, this swing will be identified. See how that works? That's exactly the way we teach and trade this. Let's see, so you're looking at the biggest trend to determine what it would take to go long or short. Well, you're looking at the swing that's identified on what I consider to be more than just the noise part of the trend. You know, in other words, you're looking for a thrust, a retrace, and a thrust. Just to give an example, let's go ahead and make this larger. And let's look at it. All right, so you had a low here. Let's just go ahead and draw it. I mean, I could use lightning 3, I guess, but let's just draw it by hand instead. See, this is the same bottom, so basically I redraw this in my head like this. See, it didn't take that out. And then I pivot this one over to here because that's technically what it did, just double bottomed. And then it broke, right? Now this I don't consider as important of a swing as this one here, because I like to look at secondary if it's on the minor ones. But you can still look at this as far as taking your multiples off. So what is this doing right now? Well, now you could pretty much do it like this. And let's say, oh, you got a little swing right across there. Right there. Not what I call much of a swing, though. And then I thrust again. So when did that trade really need to be taken off the table right there? You could take it off right here if you wanted to, because that was a lightning swing. See your low, your high, your lower low. Okay. Now what did this do after that? Let's find out. You had a little rollover, so that was another short. Okay, let's see what it did after that. Let's see if this thing actually changed trends, just for the fun of it. There's another short, by the way, rollover. See where we got our line drawn? You could short that. Short the rollover, short the rollover. Triple bottoming, be careful. And you definitely got stopped out of the trade at the line. So let's ask a question here. This trade was called here this morning. Remember, I didn't even take these other ones because I know what happens, and you do too if you've been trading a while. If you get a nice monster thrust, then start scalping because you're going to get sideways. Okay? Now, if you look at where's your next swing, well, you've got resistance right up in here, right? Let's see what they actually did just for the fun of it. Now, boxing in, I would probably take this trade. See, it thrust up, it pulled back. You want to try one just real quick? Well, too late. But anyway, I would have boxed it right there. And let's see if it works, just for the fun of it. We're just in 2. Because it did do what we said. And I'm going to put exit on close. You going to take us? We'll find out. Nope, not yet. There, we're good. I'm going to tighten my stop because that was a risky trade. But see why I did that, everyone? What did it do? It broke lightning 3, and it came back and kissed mid-band. That's a trade we teach all the time. And it turned out to be a decent trade. So was that a true trend change as far as really, heading up yet? Not so much, because if you look at this side of the chart, this was a monster thrust down. And so you pretty much figure that your lightning 3 swing is literally all the way up here. So the chart is short until it takes that out. Okay, but it's long on this side of the chart. Okay, can you take those trades at mid-band like that? Yes. Okay. Now, Louis, on that one, though, that was more of the way Charles even teaches, where you get that thrust up and you pull back and kiss mid-band. That's a good trade when they come back and kiss support at mid-band. Even though it hadn't changed the mid-band yet, it's a riskier trade, but if you just don't let it go against you, usually not a bad trade. I mean, we see this trade all the time where they'll break resistance, come back and kiss support at mid-band and take off. Now, how far do they take off? Well, we're going to find out. You got a swing right across there that they just tested. So more than likely, truthfully, I would have probably reversed that puppy right there where it kissed resistance, but I would have done it right at 67.80. And let's put a really tight stop on it just for the fun of it. See what it did. See how it kissed exactly where your swing was? This was identified. This is your secondary identified swing. And it was also a resistance area, and they respected it. So what did gold do after that? We'll find out. Kissed resistance again, didn't it? Now, if you don't want to just take a resistance kiss alone, then do this little trade instead and do what we're talking about tonight. Box in. You know, a region, for instance, hit insert, bring it down to where it's right at that little consolidation patch there. It hit resistance. It's trying to roll. Could you actually short that if it breaks that box? We'll find out. It may be our only trade that doesn't work, but it's in. And that's a, now granted, this is actually a mid-band that changed to green, but that still kissed resistance. So is this actually an uptrend yet? And the answer is sort of, but not yet. For it to really be an uptrend, it needs to thrust, pull back into mid-band, box it, and see if it'll take off. Okay? But could you short this resistance area right here where we drew our lines ahead of time? Yes. Okay? Because sometimes you'll get just enough retracement to get to a previous swing that you will get a trend change background and even mid-band. But I've got a rule of thumb about mid-bands, and I've said this in webinars before, and then we're going to wrap. See this mid-band right here? See where you're stair-stepping down, stair-stepping down? I like to draw two lines on my mid-bands, one here and one at this one, see that actually pivoted down. If you get a green mid-band that doesn't come higher than that right there, I don't trust it. Because see, all that did is barely change. If you use that as a rule of thumb, sometimes they'll only go a little bit and then go over, and then a little bit and then go over. So you may have an area even smaller. But remember to do that, and this will keep you out of some of these fake mid-bands that just do enough retracement to change our algorithms. Okay? Because to me, this is still a short. Because all it did is kissed resistance and rolled over. Okay? Did everybody enjoy this webinar? I hope it was simple and to the point and everything. But also keep in mind that you don't even have to trade some of these trades. If you can get a good trade like this on 3 instruments in the room in the morning, one on gold, one on ES, and one on oil, like we called this morning, you got to be nicely green, even if you did one contract. Okay? Thanks, everybody, for coming. Hope you enjoyed it. Tomorrow's not oil inventory day. Somebody asked that. No, it's Wednesday. And I hope everybody enjoyed this, and we'll do it for real in the morning. Okay? All right. Thanks, everybody. We'll see you in the morning. Have a great one. Let's see. Louis, just a little confused about the long when it didn't break the major swing. You're talking about right here where it came down and kissed mid-band. That's a different trade that we teach. This is when, see, I like this phantom right here, but I don't like a phantom unless it gets into this area right here and rolls over, you know, in this sweet spot. I don't like it where it just barely touches line 6. You can't get in that trade quick enough to get 10 ticks. But I do like it if it does that and then pulls back into mid-band and holds a support area that it just made and takes off. I will take that long. Yeah, that little trade's not a bad little trade to actually take, and you can usually get 10, 15 ticks. Oh, Taffeta, on your question, basically what you're looking at on high probability trades, we actually look at the markets and how they moved for the day, and we have like a profiling type deal that we look at. And so when we give you those HPTs, is what they're called, high probability trades, those are usually poised to do the best moves the next day. Since we only trade 4 charts, Those are just more for everybody to use on their own because we still trade the same 4 charts every day. But now the high energy times, what you're looking at is, for instance, here's a high energy time right here that was at 9 something today. Anybody remember exactly when it was? I don't remember exactly, but it looks to me like it was about 9:24, something like that. This is actually, would you be looking for a long out of that little box though? No, because wasn't this heading down at the time? So could you have boxed it and still taken the trade? This is just giving you a heads up that there's high energy upon you, is what it's doing. And when we open the room first thing in the morning at 7:58, if you were looking at this chart right here that we diagnosed, would you be looking for longs here yet? Like right here at the mid band. This is when we opened the room right here. Or are you looking more for, like a little rollover possibly? See? So always diagnose your charts and look to the left to trade the right, and it'll make a world of difference on your trading. Okay. All right. I hope that helped everybody. Thanks. See you in the morning. Good night.